had one job, bro, and I'll let you know.
All right, we're recording. I am videos up record. Yes, Frank. I know Frank's been hammering me. uh, I'm a break today down from the higher time frame down into what I was looking for trades, because I think that's a good place to always start how to build your basis for the trade for the day. All right. See if we can get a few more people in here. It is being recorded though, so if anyone comes in late, they can always watch it. I'll throw it in the education section. All right, let's go to this daily chart here. Let's get rid of some of this stuff because I did not use it. We'll go back to yesterday. Okay. Boom. No, we don't need this on the daily. Okay. So before this candle opened up, we were looking at price showing a lot of reaction out of here. And I was very not interested in trading this. I think I had a couple of shorts these days, but got stopped out in profit. And I sized way down due to it being NFP week. Um, but looking at the daily structure, like we went over in the past, we have this was an order block rejection. We have this expansion down. This area is already balanced, so we're not expecting price to come back into this area for a retracement until it's met a lower objective. Okay, so those fair value gaps are like teasing you, just like how those equal lows on the weekly have been teasing us for months. Okay, so I want to look at this two ways. Either this is going to be the place where price holds for now, and we need to see this order block get invalidated. Okay, we have a down close candle, Friday prints up close candle, and then we have a down close candle that closes below this up close candle and kind of runs into this fair value gap. So it grabs liquidity, balances this fair value gap, and then closes lower. So this is our order block in the midst of this price leg moving down. So we had price tap into it Tuesday, Wednesday, okay, gets above the open, comes down, but we get these heavy, heavy rejections. Um, so for Thursday, since we haven't had any follow through yet, one of two things is going to happen. Either Thursday is going to invalidate this candle and we're going to continue with higher prices and we'd see Thursday create some massive candle up, as this would have been an area for smart money to gather longs, or we're going to continue to hold this order block. We're going to manipulate up into some point of interest on this candle, whether it's the low, um, the close being preferable because then it takes you up into the opening of this order block. But let's mark these two levels out just to say we don't know what price wants to do. Is it in a hurry, or is it going to get up into the close of this Thursday candle? As we're just trying to lay out some sort of formulation for both scenarios, right? Thursday low. Okay. Okay, so we have these marked, and now our job is to wait and see what kind of reaction we have around this area. What is price showing us that it's willing to do? So now we can go to the lower time frame, and let's go on the 4 hour and see where price is at. Okay. So here's the open of, where are we at? Wednesday. Yeah. So this is the open of Thursday candle. So we have this kind of fair value gap on the 4 hour. It's kind of been getting filled in with wicks. This wick comes all the way up here. And if you notice, just again, 4 hour stuff, daily stuff. If you look at this big green candle, I just want you to take a look. Inverse fair value gap. What two candles tag that inverse fair value gap? 1 o'clock, 1 o'clock. Look at that. That's a afternoon 1 o'clock candle, afternoon 1 o'clock candle, afternoon 1 o'clock candle. Okay. So again, we're using all this stuff as confluence for how is price reacting to the same timed candles, because those are the pivot points. So market opens, we get this movement up into this is the Thursday close. Okay. And you can see how candle bodies are starting to hold. All right. And whereas Friday close, Friday 5 p.m., 5 a.m., boom. I'm sorry, where's the open of Friday? Friday 5 a.m., Thursday. Okay, here's the open. So the open's right here. So look where the opening is. So we literally get, what's that number? Open is 649.50. What's our highest wick on here? High 648.50. So pretty damn close to tapping the Friday open, which is our order block. So as we go down to the 5 minute, now let's look at 5 minute price action around these areas. Okay, so here's our Thursday close. That's right in line with the order block. Let me see here. I'm gonna try to mute you, Jack. There you go. Okay. So look at how price reacts every time it touches this Thursday close. Just
Hey,
we.
bro, are you able to server mute him? I think everybody else can still hear him.
Oh, really?
Yeah, it only mutes him for you.
Okay. Sorry.
There should be like a server mute or something like that.
There we go. Got it. Thanks, Maddie. Okay. Server mute. There we go. We're good. Okay. Back to it. Thursday close. Sell off after it taps it. Sell off after it taps it. No, no, no action in price where it's saying, I want to tap this lower level and start sending price higher. Sells off after above, consolidates again, and sells off afterwards. Okay. So this would have been looking at this price structure, how it's completely balanced. Like, like this would be a hard area to get through. You'd have to see displacement through here because there's really no area to rebalance in this area of price. Okay, so if we just look at that as this is a completely balanced price area, and we'll just take the candle body lows, candle body highs. You can also see how price is going back into this BPR and it sells off. Okay, So that's just added confluence that price is not busting through this area. Last night would have been a great, um, you could have got in with a couple micros, maybe use this as an order block in case price wanted to come up and balance this little price leg in here and use this as an order block, and put it at the top there as just a aggressive, um, move looking for the short. Okay. So I did not do that. I was busy, so I wasn't looking at the markets last night. I woke up a little bit, probably right around here. Where did I wake up at? I don't know. It was definitely, it was like 15 minutes after the market opened. So you had market open. Oh, it was like somewhere right here. Okay, and I'm looking at this price action right here. We'll take all these off. So one of the things that I loved seeing about this rejection and move up was that we have this up close candle wick just hanging out right here. And this is not a true signature of price reversal. So that gave me hope that we were going to return and at least take out this low. Um, I had this Thursday wick CE, and as we started, kind of rejecting off of it, and we had kind of already had some previous rejections off of it, I was kind of thinking that price was just going to rebalance this area, kind of run the overnight high just barely, and then continue down. So my first trade, I actually got in like after it rejected, I started getting in right here, and then I took about a $350 loss on that first one. Okay, as it wasn't showing a willingness to like reject this area. So I'm like, okay, we'll just wait. Price is going to show me where it wants to reject. I don't need to force my bias on it. So then it comes up to this Thursday high. And we see 3 5-minute candles wick above, but the candle bodies are holding. And then the next subsequent run up, we don't get a blast through, but it barely hits right below this Thursday high. So I'm getting in my order short now that I got confirmation on the 5-minute. So this is a good confirmation point for me where I'm going to start getting in, and I just took it one micro at a time because NQ is super volatile. This was a brand new funded, and I'm not looking to, um, trade super aggressively on a new funded. I just want to trade conservatively and work towards getting past the, daily drawdown, trailing drawdown. So 5-minute order block as it comes up and rebalances this range. Okay, price comes down, creates a low, comes back up right into the order block, sell off hard. So this is now looking good. And we completely break down this, previous Thursday level as well. So it's kind of bouncing in between here, collecting shorts. The rest of the day really isn't. Oh man, I'm glad I got out way over here. The rest of the day, um, really was just sitting and waiting. And so as I'm sitting and waiting, I'm looking at possible targets. And so we have, this target that was below the 4-hour low. So if I just go back to the 4-hour, we'll go here. Okay. What did the 4-hour do? Wow. Come on. What did the 4-hour do that that is confluence for price to continue lower from this area? Well, we have a fair value gap. The 4-hour drives up into the fair value gap. Um, you have a 9 o'clock open right here, runs the opening price, which you also have a 9 o'clock low, and then you have a 9 o'clock close, kind of all right around that area. So that should be a sensitive area for 9 o'clock candles. Okay, another low as well. So again, just like the daily, when we're looking for points of interest, look at how this all lines up. A Thursday high, 9 o'clock low, 9 o'clock low, 9 o'clock close, 9 o'clock open, all in the same general area. So that's good confluence for me that this is gonna work out well. So while this is happening, I like to scroll back in time. Okay, I want to see how we react at 9 o'clock lows. All right, because we got our first reaction after it tapped this low, kind of came up a little bit and then started coming back down. You're going to get reactions out of these points. And when price is trending in a direction, those reactions, if price is going to continue to trend down, it's going to react from here. They're going to put in 5-minute order blocks, but then price is going to continue lower. So you're always going to get some sort of reaction unless price is like really heavy-handed and it's just blowing through levels because it wants to get to something way below any of this, which we've seen in the past. So then to help build confluence for like areas I want to look for, I'm really just scrolling back and I'm saying, okay, where where's all the confluence at? So I was hoping that since we got reactions out of here's a 1300 candle, a
I have to go
1300
set some capital stuff, but it shouldn't take me too long.
a 1300
You just wrote
candle.
it down?
What's this? 1300 candle, 1300 candle. So we have all these 1300 candles that have rejected this Thursday fair value gap. That's what I have marked out here. So to me, that was a high probable area of price to return to on today's 1300 candle. So that's why I had that target. That was my logic behind it. Um, what else do we have over here? We had um, a previous Thursday high, which look at the logic behind that one. This is kind of a very balanced area, so it's going to take a little bit to get through. I was hoping we'd just kind of blast through it. We didn't, but this was our rejection point. Okay, so this area finally gets balanced with down closed candles, and this was our rejection point. Here's the Thursday fair value gap, and here is a Thursday low sitting right above the fair value gap. So it had a lot of confluence to have this as a target. It is NFP week, so always got to be heads up for things to not go perfectly. So then that brings us back over here. So key level Thursday low. You can see price kind of consolidates around it, um, and it's just kind of just balancing itself out, just kind of a high resistance area. Then finally drives through, kind of rebalance, and then where do we go? We hit that Thursday high. Okay, and then we get a pretty mean reaction off of that. Um, I was hoping with this reaction, obviously, that we would see some lower pricing, and that was just the first reaction off of that. But when we look at this, we hit a point of interest. We really ramp up off of that, and look at that 5-minute order block. So we needed that to get broken down, but it held nicely, and sometimes that's the breaks. So didn't get the Thursday fair value gap, Thursday low draw that I wanted, but management of this position, my this Trump wick right here, when I was in this position right here, my stop loss was set right here. I didn't move this stop loss from here to break even until this had already come all the way down here. Just because of how shenanigans can get with NQ, Trump tweets, all that good stuff. So I just left it up here. And then once we start getting like way down here, I moved it to break even. Once we started getting in this area, I still have my stop loss at break even the whole time because we've had days where we get wild swings where price could have came all the way back up here, use this as a mitigation block, use this. This was a mean threshold of a Thursday candle body. This is basically the candle body of a Thursday highlighted. We could have came back up into here, hit the CE of this fair value gap, and then rejected lower and had some wild price action. So that's why I didn't move my stop till less time. And as we stopped making moves lower and kind of had these retracements back up, really when it got down to here, I wanted to see these candles either it come back up, rebalance this, and then really break that down. And if it didn't do that, I'd move my stop all the way to the basically into this candle. Like this candle has to close and continue lower for this to be valid at all. And so there's no need for me to keep a stop up here, which I'd moved it to a couple times. I mean, you have equal highs, triple equal highs. And so that's price action. If price was willing to go lower, this candle would not have closed higher. This candle would have down closed and we would have got displacement through here, ripping out all these untapped lows that haven't been ran. So that's my breakdown. And you can see, look at that Thursday low kind of comes up here, gets above it, rejects hard down, and then look at how price wicks off of that Thursday low level. That was still giving me hope that we would drive down here. Again, management of the position though, there needs to be follow through. That's a huge part of price action. At some point in time, like there has to be follow through to break through these levels. If you don't get that, you got 1, 2, 3 taps of the 5-minute order block with candle bodies. It's either going to break it down completely or it's not like it did. And so that's the part where you just separate like you're wanting it to hit your target and now start focusing on uh, management of the trade. And there's no need to keep it way up high anymore because you're running out of time for the day. So you're looking at now keeping stops super tight, and either it's going to displace or it's not. No big deal. But either way, you're saving as much uh, take profit as you can if you're looking to like kind of full pull a trade. Um, I only entered with 4 micros again for like what I told you, just risk management of a new funded. So I'm not trying to go ham on that thing right away. I just want to be very cautious with risk management because you get enough of those and you're way above your static. You got plenty of cushion in there and you can actually start pulling profits from it. And eventually you can wait for the day that's going to give you the A plus setup and it's going to give you nice entries to like really build um, money into those fundeds. All right. Anyone have any questions on like the higher time frame breakdown? Why I was expecting lower prices because we didn't show any signs of wanting to break through Friday's order block.
Hi guys, and it's Frank. If you look at the right now at your 1105 candle, that's like a single bar order block. If you draw that, look at the confluence. Yeah, that one,
Yeah,
that green one. If you draw it across the little box at the body of that, look how many times it went to pick it up.
yeah, yeah.
So
Definitely,
that's like another
they
thing to
were
look at.
they were definitely using 5-minute order blocks um, today within price action, like pretty nicely.
Hmm, pretty cool, pretty cool.
Yeah, I mean, look at even this is like it ran these highs and then the candle bodies are still like holding that. Yeah,
Can
there's
you
gonna
go over the 4 hour, the way you actually break that down? Incurred.
yeah. Let me are we all good with all the annotations? I'm gonna start erasing some of the stuff so it cleans up the chart so we can see it. That's pretty nice how that Thursday high created the low of the session though. Just taps into it and never gets back into that again. All right, let's go 4 hour. Okay. So when we're looking at the 4 hour chart, we're looking at the same kind of way we're looking at the daily, except it's can be a little bit easier, I think, in my opinion, because you just have 3 sets of time frames. So if we clean this up, okay, we just mark this out like a regular, okay, like if we're just looking at like fair value gaps, order blocks, stuff like that. Okay, what we have here from the previous day, okay, is here's your wicks, right? It's the 5 a.m. just dumps price, 9 a.m. kind of continues, but then runs all the way back up. Same thing. Okay, so these are wicks on the daily. However, if I was looking at this market structure, let's say this was like a 5 minute chart. Okay, and there was like some point of interest right here where it's like, oh, okay, this is rejecting. At what point would you expect the 5 minute chart to continue and start running on buy side liquidity? Like at least like sometime very soon after these two runs down into liquidity, right? Otherwise, you'd be like, dude, how come it's not like jamming up? So that would um, make you think like, okay, well, maybe we're going to still keep pricing lower. So we had the daily confluence with here's our, we'll mark this out. Here's the Friday open, okay, which is the opening of that order block. So if I just take this and go boom like this, and let's just go Friday bearish order block. Even on the 4 hour chart, we can't get any candle bodies to close above Friday's open. So we're seeing a sensitivity to Friday order block, right? So then today we get the sell-off in London overnight, and we had marked the Thursday. Here's the Thursday low, and then the Thursday close. So we had marked those, and you can find all these on the 4 hour. And so even if you woke up and weren't looking at it right here, and you saw this barely tap the Friday open again, order block, and then you saw this subsequent sell-off, and you had this your Thursday close, and you know that we're in the Thursday candle, and you're like, oh man, that was a huge reaction to a Thursday level. Okay, if we were going to see this kind of continued pattern of what was going on here, what would this candle need to do? This candle would have had to like maybe run this close or run this low or something, and then jam all the way back up, creating another wick. Um, how's which in order block? GRC Friday. Okay, order blocks. This is an up close candle in a downtrend where we have price come back up. Okay, so basically this price delivers down, dumping shorts right here, comes up, reaccumulating shorts, and then boom, look at how price follows through after this up close candle. We get a huge down close candle. That makes this an order block. So what I would want to see is these next days, price return to this order block, not close above it, and build more short orders and continue. These two candles were the decoys, these long wicks. This is to get retail offsides. Okay. Because what does this make you think is going on? Oh man, we're bottoming. We're going to long. Oh, the market's been going down for so long, it's got to go back up. It was really just accumulating and reaccumulating and distributing orders. Yeah, exactly. And you're going to get that. But if we look at daily structure, okay, look at where the candle bodies have formed. Okay, Monday closes down here. All this that was unbalanced just got closed in by Monday. This area, this little cycle of daily, look at it's already balanced. It balanced itself a long time ago. There's nothing to balance in here. Okay, the next balance is right down in here because you just have wicks. There's no down candle bodies through this up close candle body. I've kind of said this like a few times throughout. I have a video on this on my YouTube. Just if you need practice with this, just go take the wicks off. Okay. And this is just a good drill to do to find where the balances are and where it's not. Okay, so if I take the wicks off, it becomes a lot clearer. And I could take these and say, well, here's a down closed candle and here's an up closed candle and only down closed came to there. So what needs to come down through there? We need down closed candles through there. We need down closed candles through here. We start looking up here, look at this is pretty much balanced. It came back all the way up here and almost closed it. Look at how this rebalanced all the way back up here. Rebalanced, rebalancing low because we have so much overlap. So that's kind of a this is a good drill to like just see without the wicks, like, hey, where are the imbalances at on the daily chart? Because the wicks can get kind of like dilute where the real imbalances are at with the candle bodies. All right. So we expected price to go back up into this order block and continue lower. Okay, so if I was going to start mapping out where Friday's price would go, one, we have to find a manipulation area. Did you um, get the 4 hour? Did that answer your question on the 4 hour? How I broke the 4 hour down? Who asked that? Was that Frank?
Yeah, it was me. Yeah, you didn't finish there. I think you were busy. He mentioned the order block. You just couldn't.
So again, see the like this hit equilibrium of this fair value gap. We didn't get any like subsequent run up where this candle closes above this candle for higher prices. It actually starts continuing lower, and so this hits CE of the fair value gap, and we reject. So even if you were working off the 4 hour, again, remember the confluence I showed you? If it, here's lows on 9 o'clock candles, low, low, open, and then right around here is like the CE of this wick, and then here's the close. So we're like looking at this is kind of like an area of confluence. I mean, you should be able to put together something on the 5 minute. Plus, you had the Thursday level that was right there too. And this is exactly where they were gathering those short orders. Okay. And so we're targeting, even if you were just playing this 4-hour candle by itself, where are your targets? One, because this didn't run it. And even if it did run it, then you would start thinking then this 9 o'clock, because this one already got ran by a different candle, must be targeting this one. And that's where it targets and then retraces up. Does that make sense?
Yeah, makes perfect sense. Could you set alerts when the price reached, like the overnight price reached up there?
Yeah, definitely. I've done that before. If you don't want to sit and look at this thing because once you start looking at these daily levels, you should set alerts. That way you don't have to like stare at a screen for a long time, and then it just whatever it alerts you on your phone.
Thanks, man.
Yeah. So Friday, okay, I'm going to erase all my Thursday levels because I'm not concerned with Thursday levels anymore. Thursday's done. It got to where it was going to go. Um, if I just start taking a look at Friday, I want to see where is a possible manipulation point for Friday, and then where would be a possible target for Friday. Um, because we haven't gotten down as far as I wanted price to go this week, I kind of wanted a really heavy sell-off from that order block up there. I originally wanted like Friday to come into this inverse Friday fair value gap and balance this imbalance. That's what I was hoping for. Okay, I don't think that we're going to get there. Um, that's a hell of a lot of points. But it's NFP, you never know. So then I'm going to say that these two Fridays right here, you have an opening price and you have the high of this Friday. I really like this area right here. So I'm going to highlight this. And that's what? That's 700 points, give or take, which is pretty doable. Okay, so I like this as as a target for Friday to dig into. Manipulation areas, let's look at price structure. So if I take this low right here, okay, and I look at that candle body low, and I look at the cycle of price that's happened so far, we can see that, again, like we've talked about, a low, it sets kind of the change of direction in some of these areas, a high candle body, the start of the downtrend before Friday's sell off. Okay, now we've completed this cycle, right? Same days. I think that this could be a good level for um, price to manipulate into. We have a close, an open, and then kind of a low right here, all kind of within this general area for Friday. So I'm just going to kind of mark out that level, and we'll just take this as like a box down to this open. Okay, so closes to open, and that kind of gets right where that low is too. And I'm just going to drag this across. Get rid of this. We don't need this. Okay. And so now that I've kind of formed these two levels, this is just the start of now I need to pair this with 5-minute order structure. That's what I prefer. Just like I showed you up here, we marked out the levels and what 5-minute order structure fell in line with it. Well, a 5-minute order block, and um, that kept price below it. Okay, so I'm gonna go down here and okay, what 5-minute structure is around here? Well, we have a mitigation block, a fair value gap that um, falls in line right with this area that we marked. So to me, that's a great area to say, okay, let's see how price reacts around this area. If it disrespects this level, then you're going to have to go and look for other possible levels, which is okay. But just start putting like some base levels that kind of match with 5-minute structure down so that and this is for a bearish case scenario. And then I'll look at the 4-hour. What do we have in the 4-hour right around there? Okay. Well, we have 5 a.m. candle, and we know that news is going to hit within the 5 a.m. candle because it always hits news before New York open. And so we have a previous close. We have like basically the CE of this wick of this 5 a.m. We have the close of this 5 a.m. So it's possible that we consolidate, the 5 a.m. candle hits this and then pushes lower. And now I would just kind of look back for supporting confluence. And this is for, again, for the bearish scenario. Let's look for supporting confluence all the way over here. Okay. So here's the top of that Friday, the Friday basically order block that we're looking for. So here's Friday. It opened 5 o'clock, even though it's showing Thursday. This is the Friday opening candle. This was the high, so we can just bump that up a little bit. And then what falls in line right here is we have a 9 a.m. candle. So if we get a quick news rejection and push lower, it's possible that the 9 a.m. candle could push down to here. We do have the 1 p.m. candle low right here that starts this fair value gap. So it could extend into the 1 p.m. time frame. Here's another 1 p.m. candle that the open kind of falls in line with right near that low. Got CE of the wicks right near the low. So there's some good structure for the 9 a.m. to 1 p.m. to deliver down there. Um, bullish, I'm really not interested in anything bullish right now. So if I'm completely off sides and price and they happen to just rip um, NFP straight up, well, what has to get invalidated? What did we talk about earlier? Yeah, what day was that order block? It was a Friday. So don't rule it out. You know what I mean? I never want to like put 100% of my faith into just one idea of one direction. I want to think about if price was to be bullish, what would have to be invalidated? This would have to be invalidated, which means Friday would push above this order block. Okay. So then that, if I get in the market tomorrow morning and I see that price has maybe blown through this level, then I might start looking at on the 5-minute structure, is the 5-minute structure showing that price wants to be bullish? Then I'm going to start targeting these areas. Then these are my Friday targets. I'd probably uh, target the Friday high. And you could start off with Friday open, but it should blow through that because we've seen rejections from that. Like I said, if Friday's going to be bullish, it should invalidate this order block. So the red box and the red line are Friday targets. So I took where would be a good area for price to manipulate up to, right? Open, manipulation, distribution. Okay, we have the opening of this candle, the close of this candle, the opening of this candle, and a low, all within this general area. So I'm just using a box instead of having a bunch of lines. I'm using the box to cover that area as like this is a heavy area for Friday price to react around or deliver to. And then the red line is just we have the top of this Friday is also like right near the opening price. So here's a nice, and this area needs to be balanced on the daily. So here's kind of a nice target for Friday to drive to if we're getting lower prices. Um, Again, everyone was looking for TGIF on this Friday, and look what happened. It just drove lower and lower and lower. We're expanding out of an order block. Again, I'm not going to tell you guys how to trade. This is all just educational purpose. If it can help you, great. But I've been there where it's like, oh yeah, TGI Friday, and then maybe you take a short, and then at the end of the day, you're like, oh yeah, I'm gonna catch the TGI Friday back up, and it never does, and then you fucking lose all your winnings. So, in my personal opinion, from getting my ass handed to me multiple times, don't take trades against order flow. So, I haven't taken longs since this Friday started. I didn't trade this, and because I wanted to see how Friday would react, and as Friday reacted, I've been taking nothing but shorts. Not one long has been taken in this whole area of price action. Even on these days, I shorted and I got stopped out as price came back up because I'm not interested in longs. If there's going to be a long, it should be an order block being placed in this area of price because we're expanding out of an order block. So that's just my take and how I like to trade because I've done the opposite. I've been a retracement trader and it's kicked my ass, and I'm tired of it. No longer am I looking to take a retracement. So
Yeah, I mean, so you're pretty much just looking, you're not going to fade order flow at all. You're just looking as retracements back into an order block to either go short or long or whatever, whatever you're trying to go with, right?
yeah, exactly. Again, if I'm wrong, then there's going to be some sort of invalidation that shows. And
Once
once
you
you,
see a
yeah,
once
once you
you see
see,
an order block being mitigated, right?
yeah, so it's like, let's say you get like a manipulation down here and that Friday candle ends up like that. What does that show you with those candle bodies down there? That shows you like, oh, okay, like price ran this temporary low, dove back down there with this candle again. Um, doesn't close below it, but then now we have this massive move up. Okay. Well, then that to me says this order block is now invalidated. So then what am I going to start looking for? I'm going to look for price to, uh, is this going to be a breakaway gap? And so I'm looking for price to manipulate down into here and then search for higher prices. Now looking at like maybe Monday fair value gap. and maybe this was the temporary low. This was just the decoy, and then we get the OTE retracement, and then maybe lower prices. It's never the market never moves as simple as we want it to. I was hoping for like a really fat sell-off, but even look at like this huge sell-off. Sell-off 3 days of reaccumulation. Sell-off 4 days, kind of you still get down days, but your up day, very small day, sell-off. Okay, here's the retracement back up into this BPR, and then boom, sells off hard. So even this took some weeks, and this was like a heavy. We hit all-time highs, like pretty fast sell-off. Then look at this. Failure to close below this wick, down close, and then what does this do? Massive run above this, invalidating price wanting to go any lower in this area. Okay. Reaccumulates. So anytime in here, if you were hunting longs, if you're looking for retracements and hunting longs, you would have been better off than trying to short anything in this area. And then your bias should turn to, okay, I'm hunting longs. We get up into this, like what could potentially be, are we going to reject from here? Okay, we don't get any massive rejection. We don't get this candle closing back down below here or like even back down into this area, the lower 1/3. It just kind of like gets up in here, rejects, but then continues back up. So longs again would have been nice. Boom, long. Takes it right to opening price. Your Thursday candle takes you right back to Thursday opening price. So there, we can get these massive like structures on NQ. So that's why I don't want to just completely rule out like, oh yeah, it has to be a short. This is what I would prefer. I'm going to keep my eyes open for this scenario as well, though, too. Um, the and here's why for that. Again, always looking at higher time frame. This is kind of a weekly order block for right now. We really haven't come back to it and shown some sort of move out of it. So I'd like to see this start to get invalidated, but who knows? Maybe like right now we're sitting pretty much like this area is balanced. So if we wanted to like wick back up and then come back up here and get in this weekly fair value gap and then continue lower, it's possible. So that's how I try to help myself stay nimble and kind of stay fluid with higher time frame. Like higher time frame is going to lead my decision making.
Hey, Kaizen, I had a question for you. Are you doing any, you're not doing any overnight, right? You'll just take a position in Asia with a micro, and then you can kind of ride that out. You don't need an overnight because you can hop in Asia, right?
I did on a few days. Like once I saw,
Yeah, that's what I'm asking.
yeah, that pretty much that's like I'm cool with that out of the initial order block rejection. Like Monday, Tuesday, my entries were in Asia, and I held for pretty much the lows of the day.
Right, because once you're static, it's just cash.
Yeah,
You manage the leverage in MNQ, and you don't need to hold overnight. You could watch the gap, watch Asia open up, and then you find an entry that you're comfortable with a significant stop loss. You're not going to care. It's MNQ. You can either add or cut as you go.
yeah, and really too, like if you're, I think these ones I was pretty confident that we were going to form like breakaway gaps and really continue with the lower pricing because this was all balanced. So I just want to see price really start to dive. Um, I think one was like 5 micros and one was like 10 micros. because I was pretty like I was like really confident in this. Like this structure was showing me like, yeah, we took 4 days and we're not showing any sign of wanting to pop through these highs unless Friday was gonna just smash through it. So it didn't. So now I was expecting on the daily just down day, down day. Um, and then here's what I look at too. If you're doing that, um, one, you have to have some sort of like solid thesis behind doing that. Um, Worst case scenario, you have a stop like whatever 10, 20 points above your entry if you're using small leverage. And if you get stopped out and price starts going back in the same direction, you should be able to find an entry. So you should be able to make up that small stop, and you might be able to size up more too because you're looking for maybe just taking like a trade for only 50 points or whatever. Like I said, everyone has their own style of trading. Um, yeah, I think that there's times where that's 100% doable. This was another good like looking for um, to grab like Asia highs and just let it ride. I think this one showed up on the 4 hour pretty nicely. Yeah, so that's kind of how I'm going to base Friday. Could you go over your entry model when you come to a level? Yeah, we can just go to today. I'm a 5 minute trader. Um, I will go onto the 1 minute if necessary. I do not like trading the 1 minute because I just don't like watching like 1 minute candles creating all this structure. I want to see 5 minute candles. That's just for my own like kind of peace of mind. Gets too much when I'm watching like 1 minute candles over and over again. So I might take it for just like purely like sharp entry levels. So I want to say it was yeah about right here because it was right here because it was respecting it. That was the CE of a Thursday wick, and that was a Thursday low high. That was a Thursday high. Yeah, that was all the way back here. I want to see this full candle get run. Here's a Thursday high. See how that matches up with the 5? Thursday high, and here's the CE of the wick. Boom. Kind of a big wick, but here's a CE. So those are roughly in place. I told you my first entry was seeing the rejection of this wick. We've had a couple days where they don't really run these highs. They kind of just come up to them and then continue lower. So I got in here, got stopped out on this candle right here. Saw this come down here, hold, come back up. Now I'm watching this level. Again, as price started to reject, I entered in 2 micros on this candle. As I got 3 candle bodies holding that level. And then my ads were, what I wanted to see was something like this, where it came up, down into this fair value gap, and then lower. Again, I had a target that was 500 and like 10 points away. So I wanted to see some aggressive sell-off. So I had 2 more entries right here in this fair value gap to add to it. And price came up and tagged them and then continued to rebalance this area first. It's probably in about $400 of drawdown up here. I have my stop loss set at the very high, and I said, okay, if this trade is going to invalidate, then after this candle, this next candle is going to blast through. and I will just be stopped out, and that this level will be invalidated for how I want it to work out. We close almost below this candle, and then we have a subsequent sell off. Still stop loss right here, as I don't want to move my stop loss while we're still in this kind of structure because of this kind of candle where Trump tweets and we get a major spike. Once price um, just dropped heavily right here and left this range, stop loss moved to this high. And then I told you guys earlier, I didn't really move my stop loss until I started seeing this 5-minute hold. And then it was like this high, then it was like this high, then it was this high. And on this candle, as it was down here, I moved my stop loss right here. And I said, okay, if it's going to follow through and break this 5-minute order block, I don't want it to go above 50% of this BPR or this possible order block. So I'll set it right here, and either it blasts through it or it doesn't. And I got stopped out. So again, I'm a price action trader, and this is from my studies from um, like ICT and the currency merchant. And so I watch price action on the 5-minute and look at structure, and that's how I take my entries. So aggressive entry would have been nailing orders up here. Again, it was a brand new funded, so I wanted to be on the conservative side. Does that answer your question, GRC? Cool. Yeah, you got it. Thanks, Entity. I know you're a time guy too with some things. So I think we covered today, tomorrow's possibility. I don't have anything else unless you guys have any specific questions.
Thank you very much, for your time.
Yeah.
Hey, Kaizen.
Yeah, you're welcome.
Hey, so just to recap what you kind of ran through as far as
Hmm.
and then you mapped out a
Oh,
bullish or a bear
oh, you're cutting in and out, bro.
candle, right?
You're cutting in and out a lot. We're catching like every other word.
Crap. Okay, I'll just type it out. Thank you.
Yeah, you got it, man.
So you're off to work next week, Tyson.
Yeah, I'm pretty much gonna be gone all week at work, so that's why I'm like kind of giving you guys my time this week.
When it's like that, you sleep there, right? You have to sleep at the station.
Yeah, it's our shifts are 24 hours, so it's like a basically like a giant house. All our rigs are there, kitchen, sleeping quarters.
So it's a week off, a week on, something like that.
It kind of rotates between 2 or 3 days a week, but then I'll pick up like extra shifts. So like next week I'm picking up some extra shifts. So I'll be working like 5 out of the 7 days that week. I work for the fire department, Chris. Um, yeah, there's times where like I'll trade on my phone and stuff and a laptop, Josh, if it's like slow. I've kind of held myself to really not trading at work anymore because um I'm also a paramedic. So it's like if I go on a call and now I'm like with a patient, I can't like manage the trade. That kind of sucks. and I've like blown accounts doing that. So I'm like, yeah, I just either paper trade, like just practice. But yeah, try not to trade at work unless it's like super like obvious, and I know I can take it like a nice scalp. Like, okay, this is definitely gonna like target this lower high like pretty quickly. I might scalp some stuff, but yeah, definitely nothing like this. Yeah, I shouldn't be messing around with legit accounts though while at work. So I really don't do that anymore. Less is more. This is another reason why I prefer this methodology because it really gives me patience to just wait for like higher time frame setups, 4 hours to be confluence. Like if those two charts are like lining up, then it's like, okay, cool, I'm in this. Yeah, exactly.
And the weekly's never in the picture.
It is, but I'm not referencing it like referencing it like once a week.
Or more for targets, I guess, right?
Yeah, so I would just look at the weekly and be like, okay, well, if I'm looking at this, like here, I'd be like, okay, weekly order block, how do we react to here?
Hmm.
Okay, well, the day, see if that pops up on the daily. It's like, well, we've kind of like popped out of it, like definitely not closing into it. So we'll see what Friday does. Again, that's another reason why it's like, do I really want to, um, like one tomorrow? Do I really want to trade heavy? Really, no, I don't. And I'm actually probably gonna be gone all day tomorrow. I'm going out shooting, so I'm probably gonna miss most of tomorrow, which is fine. I'm telling you, when you start like being able to just wait and patiently capture some of these moves, like being able to pull like full daily candles based off this stuff, like two of them, like even at minimal leverage, you're capturing like at least 4 grand. So
It's amazing. All right, guys. Have a great night. Happy trading for tomorrow.
yeah, be safe tomorrow, everyone. Don't go over leveraging. All right, we'll catch you guys later. It's recorded, so if anyone missed it, I'll download it and throw it in the education section, and you can reference back to it. But thanks everybody.